Welcome back to Halftime Report on CNBC TV18. As of now, Nifty managing to hold on to 24,850 levels. Obviously, had a lot of listings that happened today as well. We had IndiCube, a muted listing that's come in there. On the other hand, GNG Electronics, that's the one which saw a good listing. More than 40-50% as of now is what the gains is what it's holding on to as well. But talking about IPOs, we do have Blackstone as well as Sattva developer-sponsored Knowledge Realty Trust, which is going to be coming out with a 4,800 crore IPO, opening on the 5th of August with an offer size of 4,800 crores. Like I mentioned, this is going to be to discuss in terms of the IPO offering, the business outlook. My colleague Reema caught up with Vijay Agarwal, Managing Director at Sattva Group, Ashish Mohta, who's the head of real estate acquisition India at Blackstone, as well as Shirish Godbole, Chief Executive Officer at Knowledge Realty Trust, to talk about the outlook for the company. What are we expecting there? Listen in to an excerpt of that conversation.
So largest is the right word. Rima, we are 62,000 crores gross asset value. We are 46 million square feet, 3,500 crores of NOI. A very large and diversified tenant base across the best markets in India, Mumbai, Hyderabad, and Bangalore. So that's, in my mind, you sort of dovetail that with what's happening in the office markets today. You've seen the best absorption. We have the highest portfolio occupancy amongst every other REIT. We just think this is the right set of attributes that brings KRT together.
Shirish, let's get to the numbers then. Right? In your RHP, you're projecting about a 12.5% increase in the net operating income from FY25 to FY29. Take us through the math and the assumption.
So we are projecting a 13% CAGR, as we call it, as compounded annual growth rate of each year for the next 4 years. And 60% of that, 13%, 60% of that is actually through contracted transactions. So these are leases in place or new leases we're signing or expansions we're signing. So the good news is most of that growth is built in. The remaining 40% is through either leasing up some of the vacant space we have 91% occupancy, as you said, as well as a mark-to-market potential. Another beauty, as Ashish was pointing out, but the attractive part of our portfolio is that number of our leases are below market rents, and we have a potential to raise those rents 23%. So that, along with the lease up, makes up the remaining 40%. 60% is contracted revenue. And so that's the 13% growth compounded annual each year.
And what is the kind of dividend investors should expect?
So we have a stabilized yield that we are going to provide to our investors, beginning with 7.2%. It grows quickly thanks to this compounded growth. It grows quickly to 7.7 the following year, and then 8.2, and so on. So we have a very good dividend distribution strategy as we go forward. Plus, there should be some more capital appreciation. And therefore, total return in the mid-teens is what we hope we can provide to our investors.
And this 7 to 8% yield, how would it compare with the other REITs?
So, today, it's obviously a moving target, the market's trading. But Embassy, which would be one of our competitors, Mindspace, are both trading at a sub 7%. In fact, Mindspace is a sub 6% yield. So we think our 7.2% is a very attractive yield as we provide it to our shareholders.
The other thing, Rima, just on the dividend yield part, I think that's pretty relevant across REITs, is that it has the most tax-efficient distribution structure. So when you talk about the dividend yield, call it broadly about over the next 3 years, you're looking at about a 7.5% yield. Post-tax would be close to about 7-ish. Okay. Right? So the leakage is very little. You compare that to an alternative fixed deposit investment, T-bills, you lose almost 30%. Sure. Right? So the leakage and therefore the post-tax dividend yield to the investor is the most efficient. And I think that's the biggest selling point here from an investor perspective.
Now, I can see that some of your tenants are global giants. You've got Apple, Cisco, Amazon. You've got large domestic front offices at the Birla Group. So how explain to us the difference between KRT and the others in terms of your tenants, in terms of the lease structure, in terms of the location?
Very small percentage of our tenants are actually from the ITES industry. And that's the big differentiator with us. Our top tenants are all global capability centers and not ITES tenants.
Can you give numbers?
So that's a big difference. So, 29% of our total space is occupied by the top 10 tenants. And if you take that in comparison to some of the other competitors, the IT/ITES number is a lot higher than what we have, which is none. So in our top 10, 0% is from IT/ITES. They're all global capability centers or front office space, as we have in Mumbai, but none of them are IT/ITES. And that's a big differentiator
And
versus the
GCC
others.
would contribute how much?
So GCCs as a whole contribute about 45%, but in the top 10, I would say it's a big 75% of our top 10 are GCC.
Mr. Agarwal, now you're a veteran in the real estate industry. You've got, I think, 80 million square feet. Now, India's office and residential strength, especially in cities like Bengaluru, has been underpinned by the Indian IT industry. Now there is fear that with job losses picking up in the tech sector, and who knows, tomorrow even GCCs could lay off because of AII. Do you think there is a risk to India's real estate market as a whole?
Rima, that Indian real estate has been not only on IT and ITES, it has been, as Siris has mentioned that one, it has been all the sectors are growing in India very well, because you name the pharma, consultancy and your GCCs, your education sector, every sectors are in growing path. Our India story has been last 10 years and the next couple of decades will be very, very progressive. Not only the office space, residential space is also has been going in a big way. So we don't see any problem. As Siris has mentioned, our exposure in IT/ITES has been very minimum. Other sectors, GCC, consultancy, pharma, financial sectors, all are been much bigger, this thing. So we don't see any risk in that.
Ashish, 46 million square feet right now in terms of an office space. What's the pipeline looking like?
Look, I think a couple of things. One, most of our assets that were high quality and REITable are part of this portfolio today, right? And that's the same for Mr. Agarwal as well. I think all of the Satwa assets that could have been REITed today are in this portfolio. Alongside that, there are a bunch of ROFO assets. That's something that's been identified on the Satwa side. Additionally, I would say that I think what we've seen in Nexus, right, is been the fact that with a brand neutral platform, you have the ability to add more assets from developers who don't have the scale necessarily to do their own REIT, right? And I think that's what we want to sort of position KRT for. If you look at debt levels today, we are at about 19%
This is
LTV.
post the debt reduction.
Post the investment.
And 19% of your gross asset value.
That's correct, right? So it is one of the lowest LTVs out there, which gives you a lot of headroom to acquire assets without diluting. But I think 46 million square feet can easily become 90 million square feet over the next 5 to 10 years.
Okay, so that's Knowledge Realty, 4,800 crore IPO hitting the market soon. Just want to point out for the markets, well, it is range bound. Just want to point out one particular stock which is in focus today. That's Dr. Reddy's, which should come up for you. It's recovered from the day's low, but nonetheless, it is in focus because Novo Nordisk, which is the Danish pharma company, which is basically the innovator of Ozempic as well as Wegovy, those blockbuster weight loss drugs, has in fact cut its guidance. So they're not expecting as much growth as anticipated earlier. What they are saying is that they are now expecting 2025 sales growth to be anywhere between 8 to 14% versus 13 to 21% previously. And that's because of the slowing sales in Ozempic and Wegovy. Now, remember that why does Dr. Reddy get impacted is because they will soon be entering the market on a generic basis. So, and along with many other companies such as, the other generic filers, but nonetheless, Dr. Reddy's is expected to be a front runner for this. So that's the reason why you're probably seeing the stock down around 0.8%. We'll take a short break, but remember to tune in to the all-new CNBC-TV18 Prime, bringing you insights from policymakers, business leaders and economists, shaping both the world and India's future. CNBC-TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune in to CNBC-TV18 Prime at 12 noon for the Global Reset at 1 p.m. for the Big C and Global Lens at 8:30 p.m.